Let's bring in Brent Thill of Jefferies and Dan Ives of Wedbush Securities for a better read on the tech sector heading into the new year. Very good afternoon to you, gents. Dan, I'll come to you first of all, just the broad question of how much you fear multiple compression if rates rise significantly next year.
Look, I think it's obviously out there, and you've seen it hit some of these stocks over the last, call it, month. But to me, the fundamentals are significantly being underestimated by the street for tech, specifically cloud, cybersecurity, 5G going into 2022. So we'll see some of those white knuckles. But in our opinion, tech stocks are up another 20-25% 2022, led by cloud, cyber, and of course, Apple, which continues to be our favorite. And I think that's the one thing. You'll see some of these sort of multiple compressions, but it comes down to the growth. I view it as a fourth industrial revolution playing out.
We actually got some news, Dan, on that topic of yours, Apple, during closing bell earlier, which is that they're closing down some of their, well, all of their New York stores because of Omicron. Quick reaction to that, I guess, not that groundbreaking.
I mean, it's only about 2% of sales are impacted tangentially. And if you look what we've seen from, ultimately from e-commerce as well as in China, right now demand is outstripping supply by about 15% for iPhones.
Brent, also some news for one of your names during closing bell that Starboard are taking a stake in GoDaddy. I guess they've got some form in that space, Starboard do. What do you make of that?
I think it's a great buy. It's a great value name. It's not expensive. It trades at 9 times free cash flow. The company isn't the fastest growing company in tech, but it's consistent and steady. When companies sign up for GoDaddy, they tend to stay on the platform. The CEO took over 2 years ago and is driving a higher level of innovation. So not the fastest, most exciting name, but a name that is underpinned by great valuation. And Starboard's a great investor, obviously, and we think clearly there's room to over $100 plus a share on the stock. So we like it. Again, a name that's going to grow low double digits. It's not going to be the fastest growing name, but a good value name for 22.
I want to get some individual stock picks and keep going down that line of attack. And Brent, talk us through your call on Snap for next year.
We think Snap snaps back. It's had a difficult year given the Apple IDFA change, and we ultimately believe that this is the platform that the younger generation is growing up on. They have so many avenues of monetization. It's a great story. So that's a great growth story that we think in the back half of next year should benefit in a much stronger way than they did this year, given the Apple headwinds. So that's a story. Again, we don't believe that there's any fundamental issue. This is an Apple-led issue that impacted the rest of the digital ecosystem, including Facebook.